Okay, great. So this is a rapid fire panel, and it's going to be led by Meredith as we run through things. So she's going to tee off questions. Any questions that you feel like haven't been asked, obviously feel free to chime in from the crowd as well, or if a discussion point comes up and you have something that you want to offer, just raise your hand and we'll bounce out to you. We have some great speakers this afternoon. Brett just got here. He's going to be speaking right after the panel. We're going to be diving into government and games after that. So a couple great speakers, and we're going to try to cover, there's so much ground to cover on blockchain that we tried to assemble some discussion that helps to fill out the rest of the picture beyond the really specific speakers we have later on in the afternoon.
Great. All right. Well, welcome to part 2 of day 1. My name is Meredith Trudiak, so I work with Calibrate blockchain. I've been in the blockchain space for about a year, but the technology world for about 10. So I'm working on creating this series of events, and of course this is our first one, so we're really happy to be in Spokane. To start things off, I wanted to do a little poll the audience to just see kind of what kind of mix of people that we have and familiarity with the blockchain space. So question number 1, please raise your hand. Do you know who is Satoshi Nakamoto?
Everybody knows.
100%. Great crowd.
You are all wrong. No one knows.
Yeah, right. Great question.
It's him.
Okay. Question number 2. Do you know what the letters XRP stand for? All right, a little left. That's about 10%. Do you know what the letters EOS stand for? Oh, a few more actually. And just to see how big we think blockchain will get, who thinks that blockchain will be bigger than the internet within the next 10 years? Okay. All right, well, thank you for participating.
One other quick question.
Doesn't the blockchain run on the internet?
Impact on society.
You're not getting John Malkovich on us, are you?
Yeah. He's one of our agents.
So quick question. How many people in the audience own at least a single coin? 60%, 70%? Okay.
Nice. All right, so now we will jump into these questions. So to start things off, now that we have covered advertising, let's talk a little bit more about finance. And are ICOs dead, and what is the future of financing blockchain companies?
All right, so I'll start with that. ICOs, in and of themselves, never really should have happened. Basically, what they were is pre-sale of potentially future assets, in this case inventory, for some system that may or may not work in the future, sold to a retail audience that generally didn't understand that when they put money into a company, they should have some sort of recourse if there was no performance. So they're not dead, just what we know them as, and what the sensationalized version of them is very much dead. Now what we're seeing, and I'm seeing this a lot myself with the people that I talk to, is that when a company is wanting to issue a token or issue a coin, there's no more question of, is it a utility token or is it a security token? They're going directly to institutional investors and saying, this is what we have. We want to sell this coin. It's going to give you X dividends. You're going to get this kind of rights within the company. And often the companies that are looking to do the investing will say, okay, that sounds great. We're also going to take some equity. So what I've been seeing is with a lot of the ICO deals that are going and being closed, there's an equity factor to it now. There's investor rights. The people that are making the purchases are really focusing on making sure that they're treated as investors.
Yeah, just one implication of it, which is unfortunate that I would just add, is that the financing now looks a lot like traditional financing. So in traditional financing, if you're raising capital for a tech company, you seek some sort of exemptions, which typically mean that you need primarily accredited investors, which means people who already have a substantial amount of money making more money. The original promise of decentralization was that we can all sort of participate. If I want to put some risk capital into something and I'm not an accredited investor, in the beginning version of decentralization and blockchain, you could. In this new world with, know your customer and anti-money laundering and now regulation supporting the need for primarily accredited investors, you do end up not having a truly decentralized economy, which is unfortunate, at least if you're a U.S. citizen. So if you're a citizen in another country, then that can be different.
I would also argue that the retail market kind of did that to itself. They completely forgot that there's some basic things that you have to look at for an investment. Like, who are the people are you investing in? Team is a massive thing. And what a lot of these, call them early adopters of that kind of raise model, what they did is they suspended all that, and they just go, oh, does it sound really cool? Does it sound like something I might want to use eventually? And then they put a massive amount of money into it, and we're essentially fleeced.
Yeah.
So that's kind of what the market did to itself, because by decentralizing it and leveling the playing field, it made it a lot easier for people to get defrauded.
Yeah. And there is a good side of it too, which is projects, as you're pointing out, that are speculative, that are trying to get $20 to $30 million to eventually ship a product, versus now you're starting a new blockchain company, you put a team together, you build working product, you're much closer to the mark in terms of customers. That's probably a better time to raise enough money to get to the next stage. So you probably don't need 5 rounds of funding done in the first one, because it typically does lead to bad behavior and too much candy being bought in the candy room of the startup or whatever. But it doesn't necessarily lead to better companies, because a lot of those, as you pointed out, haven't necessarily panned out.
Most of them haven't.
Yeah.
So now that the 2018 bubble has passed and will probably never come back, what are investors looking for besides a solid business plan?
Something that's actually going to have a market that hits a management team that knows what they're doing, has a track record, developers that are, staff that works for the company that has a history of actually producing something. It doesn't have to be world changing, it has to be something. And then, on top of that, the 2018 bubble, so to speak, it was just more headiness of, we've got all this money that just suddenly appeared overnight.
And a lot of FOMO.
Yes, and a lot of that too. And what I think, I think Anissa said it well earlier, is that you have to go back to the basics now. Is it a strong idea? Is it something that's going to have a market? Do they have numbers that support the arguments they're making? And have the people that are trying to do it done anything before? If they are credible developers, they're going to find funding. They're going to be the right project to fund. There's just no room anymore for people that say, I need to be anonymous because it's safe. Things like that, which is what we saw a lot in the ICO space.
Yeah, flight to quality. I mean, the bar has raised quite a bit across the board in traditional finance for software companies anyway. So it used to be you came up with a great SaaS equation or a business process that needed to get automated, and there was funding available because it's a great recurring business model that generally seems to, after you recover the original recurring engineering, non-recoverable engineering costs, they could turn into great cash flowing businesses. Mm-hmm. Now it turns out that not only do you need the right equation, you need product market fit, you need to be further down the wire, then you're getting that larger financing. So a lot of the traditional finances, become more challenging over time. The less profitable or extremely unprofitable startup is not getting as much money thrown at it in regular finance, and so the same implications exist in blockchain as well. Companies that have figured out a real problem, they have a solution that's purpose-built on blockchain because it makes sense to be on blockchain. And as Dave pointed out, they've got the right team, they're executing, and investors can see a shorter term future emerging out of that that's going to lead to eventual return for them.
So let's get a little bit specific. What projects have you seen lately, and what industries do you see are, kind of leaders for being disrupted with this technology?
I'm really excited about Solana at this point in time. They believe that they can achieve 710,000 transactions per second, which, wow, that would be a lot faster than 7 or 3 transactions per second. And Antonoli, I don't know if I'm pronouncing his name correctly, was the original developer on Brew. This was back when you had to be like a serious hardened person because you shipped software on phones that was not updatable. So if you ship software that eventually bricked the phone, then it's an extremely challenging space that he came from. He also solved some big problems for Dropbox, and he has a path forward to allow for really rapid fire transaction speed with smart contracts. So I think it's an exciting project and it has some promise.
So for me, there's a couple I'm looking at, a couple I'm associated with. One of the ones I'm associated with, and the reason for that association is because I think they have a strong product idea, is Prism Labs. And they're an entertainment company. They're making a video game platform that'll essentially live on your dining room table as opposed to living in your living room. But what's interesting to me is their blockchain implementation. One of the things that they've been working on is the assignment of ownership to a digital good and the reassignment of that digital goods ownership specifications to tangible objects. So now you can actually extend this information out to essentially anything that you have to deed or title.
Yeah.
Right? If it's a tangible good that you have to have some sort of ownership provenance for, this system that they're working on would absolutely do it. And that's, I mean, there's any industry that has any semblance of AML and KYC that has to be performed, which KYC is know your customer. Vehicle, it's a way to title it, put that title on the blockchain, and then not have to worry about, you know, this office lost it or that office lost it or somebody accessed it when they shouldn't have. And then just the other expansive nature, the nature of the technology itself, we're already looking at ways to bring it into the legal cannabis realm here in Washington. Then another one that I'm a bit interested in, and I'm wrapping my head around it. I spoke with them about a week and a half. One of them is actually at a table in the back here. It's a natural resources company that they have land, they have a plan to extract natural resources, and essentially they want to tokenize a portion of the equity, as well as tokenize some of the inventory that comes out. So essentially you would be prepaying for what comes out of the ground, and you would be receiving the end product with a price that's pegged to right now, with a 22 to 28% premium. And in the natural resources, you don't get those kinds of very large premiums unless there's a lot of currency fluctuation, which the dollar has been strengthening, so there's not a ton of currency fluctuation right now. That's what I'm going to keep an eye on because I find it very interesting, and it's essentially one of the first times I've seen a legitimate natural resources concept come up that also has room for asset logging on blockchain, sure, which is what the initial thought is right now.
That's cool. Yeah, I'm also excited about the intersection of blockchain with other either traditional or new industries. One of the topics we're going to cover tomorrow is object recognition in augmented reality. So state of the art of augmented reality is, you know, your phone can look around the room and kind of identify planes, you know, the tables, the floor. It can kind of recognize the soft, spongy, human type things that are sitting around, but it can't necessarily recognize that that's a MacBook Pro. So the intersection that Adroit is working on is augmented reality, specifically object recognition, that happens to make a lot of sense to do with the blockchain in terms of building an economy around that of customers that are either industrial customers or eventually a consumer economy around it as well. So I think those kind of companies are really interesting because they've got real IP and traction, and it happens to be a really good fit for where things are at with blockchain.
Nice. So we all know that blockchain and Bitcoin started from these very libertarian values, and now sometimes it feels like it's all about the money and the profit. But a lot of projects are being built kind of in the middle zone. Do you have, what kind of insights or project ideas have you heard of that are kind of in that middle space, like, or details on those governance structures that are kind of bringing together the ideals that you know blockchain was based off of, but also have a profit component?
Right.
Well, so the ideals that the vaunted I can't even say it, Satoshi Nakamoto brought about to create the Bitcoin was he was a phreaker, or a group of them, and essentially wanted to create a type of currency that couldn't be tracked, which very much goes against how we do business in the United States, at least since the creation of the Patriot Act. which in turn means any bank or any company that wants to work with a bank that works with a United States-based bank at any point has to follow those rules too. So one of the biggest problems that we're seeing in cryptocurrency specifically, but blockchain in some cases as well, is that there is that core group that wants the ability to essentially transact in any way they want for anything they want and not be tracked, paired with the people that are a little more, I guess, market focused, where they realize that that's great, but you have to work within certain bounds if you want to be able to go to the larger retail market or business market and actually make a product that gets out into the public space. I don't think those two systems of beliefs can live together for much longer. And I know what I've seen myself is that the people are getting more business focused. And they can have some of those beliefs of freedom, but at the end of the day, you still have to feed the beast. You know, there's still, money has to come in, bills have to be paid, cash has to flow out. That said, I think the company that really comes to mind as trying to straddle both lines, and I think so far they're doing it somewhat effectively, is Library. LBRY, a buddy of mine, Rob Smith, works there. And I think that they have a very free state focus. They're based in New Hampshire, kind of a very free stater focus of we want to create a platform for people to put out their message, put out their content, put out what they feel is interesting to them, and that they don't want to impede people being able to do that. But they've also learned that there's certain things that they're going to have to do, content-wise, to make sure that their blockchain doesn't get filled with very questionable content that'll cause them to get closed down. But as it is, I mean, they're a content company, and that's a challenge they're going to have. Because not all content is content you can have in a freely distributed, immutable ledger. You know?
Yeah, it turns out that a distributed public ledger is really not a very good way to do an illegal transaction. I mean, the government's gotten really good at sort of figuring out forensics and how to, do the blockchain block thing and figure out what exactly is going on. So the $100 bill continues to be the dominant way that illegal transactions happen on the planet. And so it's just interesting too when you think of the timing. I mean, CyberGold, I did customer acquisition for CyberGold back in the day, which is kind of a predecessor digital money concept, right, prior to Bitcoin. The strange confluence of the world sort of melting down financially in 2008 led to the door opening and kind of this incredible paper that was written that combined some kind of pretty well understood concepts into a new, unique format that, 10 years later you could say, sure, it exploded in 2017 and then it collapsed, but at $3,500, can you really argue that it collapsed? I mean, we've come so far in 10 years, it's kind of incredible. I mean, it took nearly 30 years for the internet to happen on the scale and order of magnitude that we're talking about now. I don't think, a philosophical bent towards a free state is probably the reason by which blockchain will become the biggest thing on the planet. I think it's a better technology solution than centralized services and resources are over a long period of time. There's uniqueness to it that as transaction speeds increase and the desire for privacy and cryptography meets a really good user experience, that there's going to be all kinds of interesting new products that emerge. Right now, outside of the use case of Bitcoin as a buy and hold, being sort of the massive big driver in the market, that changes and evolves as the user experience improves. So Vitalik Buterin, instead of, the metaphor is, okay, if Bitcoin is a calculator, then Ethereum and smart contracts are sort of your smartphone, because you can put all types of interesting dApps and distributed applications on that phone, and they can perform all sorts of interesting, collectible-oriented or moving away from stupid pieces of paper that we develop on the legal side to try to put together obligations between people and parties and businesses towards ones that are actually coded so that when a certain condition is met, somebody gets paid, right? And so the implications of that are far-reaching, but it's still early in terms of the implementation qualities and the types of companies that have built really cool things on top of it. But it's all coming pretty fast, and in many ways, arguably, is way ahead of schedule just given how much exciting stuff has already happened.
I can agree with that. I think a lot of us need to remember that even though we want this technology to be fully fledged and working yesterday, we are still at essentially the bleeding edge of a new technological evolution. It's new technology that we still don't understand what a good user experience is.
Right.
We still haven't even got to the point where, you know, we can talk on transaction scales that are usable for the world that we have right now. I mean, it's essentially, you know, trying to use YouTube with like a 2400 baud modem. It's just not going to work.
Yeah.
And there's still years of development that have to, I saw a couple there's some really old people out there. I saw that. But no, I remember, like, thinking back to when I had a 4800 and 9600, things moved slowly.
Right.
And the technology just wasn't there yet for us to communicate at the speed that we have now.
Right.
Now we have, you know, you can transmit gigs of data through your phone.
Right.
It's ridiculous. But
Yeah.
that was years of development and movement. And
Right.
I think we're still years, 5-6 years,
Yeah.
before we're really still going to see that killer, oh, this is what Bitcoin was for.
Right. No, that's a great point. I mean, YouTube was really the confluence of bandwidth being fast enough and cameras getting cheap enough and people being willing to document the weirdest things to publish there that led to, you know, this massive growth. Right.
Well, yeah, compression standards.
Exactly,
I think
compression
it was
standards, yeah.
H.264 that really made
Yeah.
YouTube possible.
And getting bought by a company that could afford to continue to buy the bandwidth until the advertising model got caught up. But it's a great point that the same thing is true on blockchain, that if you're doing it more than buy and hold and you're doing Ethereum and other types of transactions, you still have to be relatively geeky in order to sort of pull it off and, you know, send your public key instead of your private key. There's just a lot of user experience implications that aren't there yet. But when you say the word yet in technology, you have to remember how quickly that all changes, just like YouTube changed everything. You know, we're at sort of the eve of Web 3.0. Web 2.0 was, we think it's really cool that everything's free, so we give away all of our pictures and photos and videos to gigantic companies that make enormous sums of money. Now Web 3.0 could look like individual sovereignty, privacy, making some portion of that money along with the people who monetize you. But that's still going to take time.
And I think if we go back to a second ago where those kind of libertarian ideals were talked about, I think that's where they can come in and help inform essentially, you know, identity as a product where we can monetize, you know, that DNA information that 23andMe has and has been given to GlaxoSmithKline.
Yeah.
You know, I should have a portion of what they've made if they're sending my DNA information.
Or if you're going to give your DNA to the spouse of a company that tells you that they're not evil, you probably should anonymize your profile because that's going to be forever.
Well, if somebody's telling you they're not evil, they're selling you something.
On the crossover between kind of the libertarian ideals and the making profit, EOS does seem like a blockchain that's trying to more be in that space, especially with the delegated proof of stake protocol. How many people are familiar with delegated proof of stake and kind of what that means? So it's a little bit different because a lot of, you know, there are many blockchains that are out there, and I think we're all more familiar with Bitcoin, probably Ethereum, and maybe a few others. But with EOS, there's actually a community that votes to have a representative that like makes decisions on how to move the blockchain forward. So, for example, I'm an advisor on a project called Higher Vibes, which is building out a jobs marketplace. And with their token, it has the utility of when someone's getting hired, there's the hirer, the job seeker, and the recruiter, and there's an exchange between participating within the ecosystem. But then everybody who owns tokens also has voting rights to make certain decisions within the ecosystem. So it's an interesting balance where there is a for-profit component, but it also has, you know, people being decision makers within the ecosystem, and it's not purely a centralized company making those decisions. So I wanted to transition into the next question, which is about infrastructure and how things need to change from going from a centralized world to a decentralized world.
You don't get password resets, so that's one thing of not having somebody that sits in the center. 2FA has grown up quite a bit to the point where you could, assuming that you haven't been pwned at the cellular mobile level, you could, use 2FA to help augment the recovery of a lost key, because humans and people tend to, if it's possible to screw it up or do it in a hurry or not write down their password correctly, they tend to almost do that all the time. And so I also wanted to point out an evolutionary topic. All of the difficulty of early blockchain has made a bunch of people really smart on the topic of cryptography who otherwise wouldn't have. Guys like Dave and me and all of the others who stay up late at night reading white papers. This is a whole brand new, fresh universe of people who are getting really smart on the future topic of decentralization. Aside from that, there's a lot of extreme benefits by not having a company sit in the middle, but allowing people to directly communicate and form transactions without an Uber sitting in the middle or a similar company that really is serving a middle person function as opposed to deriving any unique value. So I think ultimately it's probably a world where we end up having a lot of 1099s. We have a lot of people who are working independently and making enough with blockchain who probably get paid daily, by the hour, by the second, instead of the traditional systems where people wait 2 to 4 weeks for a paycheck that may or may not be coming in the future. So I think broader economic conditions are going to drive the intersection with some of the advantages of decentralization, where a removed middleman means that more individuals can make enough that they can earn a living without it necessarily going to a gigantic company that sits in the middle now.
Yeah, and I think that's something that is useful for a region like this. A bunch of my friends live in San Francisco, make fantastic money, and spend that fantastic money on rent.
Sure.
Right? And then, you come out to a place like this, and the cost of living, quality of life is significantly better.
Yeah,
right?
True.
However, going back to the security side, I think what we can end up seeing is that in the future, like right now, I'll admit I have several passwords I've probably forgotten because they're overly complicated. And I know I have a couple.
The key is to use the same one for everything.
Well, I have a couple that are like 27 characters. They're non-trivial, and I think if I ever lose them, if I ever forget those particular ones, there's no chance I'm ever going to remember it. And I think one of the issues that we're going to have to figure out is in a world like that where your private key is your private key, and if you lose that, you've lost access to everything you have.
Yeah.
How are you going to retrieve that? What is going to be the validator that can be used?
Yeah.
And I think that's where we can see biometrics on the blockchain,
Right.
where, at the end of the day, your password is really your fingerprint or some other unique feature about you.
Right,
an
or
iris scan.
multiple factors,
Right, or
because there's
multiple
still
factors.
like the thumbprint can get pulled off of a glass. So there's all these strange kind of new.
Exacto knife. Exacto knife right there.
Yeah, but it is funny because I've done a decent amount of InfoSec work in my career too, and it's like every time you layer in new security practices, it reduces the utility or how easy things are, right? Using one password, not the product, but using a single password everywhere is super convenient and super not secure, right? So
But
you trade off one for the
we're all
other.
Humans. That's
Yeah.
the thing. We like to be like water.
Yeah.
We like taking the easiest route.
Yeah, absolutely.
Even amazing examples of what we are still take easy routes on a lot of things.
Yeah.
So the more complicated a, say, security system is, and you have to admit that in blockchain, security is fairly complicated. It's definitely non-trivial.
Right.
People are going to take the easiest route they can.
Yeah.
And as developers, we have to figure out how to
Yeah, it's true.
guide them safely across that river.
And I think a lot of it does, the bridge between where we're at now and the future does look like a lot of mixed infrastructure that's mixed decentralized with centralized. So examples of that would be things like 1Password, where there is a business that makes a ton of money selling people password vaults. And if you, depending upon how you set it up, you could, in theory, get into a non-recoverable state, right, where you cannot retrieve your passwords. Now, it's not a blockchain company. It's used by a lot of people who do blockchain stuff because they keep track of their 28-character passwords that have mixed, uppercase, lowercase symbols and numerics. But it can be useful. It does use really powerful cryptography. And, but it's a mixed use, just like block stacks or some of these other theories where, look, if I put an encrypted blob of nothing that's readable on Dropbox, does it really matter that it's not on the blockchain? It doesn't necessarily, and those kind of gap measures, I think, ultimately make the experience more usable. And then back to your example, multi-factor could allow for recovery, right?
Yeah.
So some combination of I'm not pwned by my cell phone, I have a biometric, reading, and then 2 of the 3 could allow me to recover my account, which is probably better than a central party maintaining my keys for me and being able to give them back to me if I lost them, because somebody could become me, so to speak, and then, compromise that infrastructure.
I used to dabble in breaking people's passwords when I worked in the casino industry. It's very simple to fake trust credentials in order to get people to give you their information.
Right.
I won't go too deep into that, maybe sometime over whiskey. But the other thing that I think is worth thinking of or talking about is what will it take for the infrastructure itself to kind of be a little more easier to understand, greater acceptance from people. And I think one of the biggest things is we have to realize that as cute as the term mining is, it's not a legitimate term. It's a data center. Like, people putting together a mining operation, yeah, it's just a data center. Those are servers. Like, we have terminology for it, terminology that business people, investors, the media already understand. One of the worst things we can do is create an all new set of terms to describe essentially the exact same thing in order to set ourselves apart, because what that does is that makes it more exoticized and fetishistic, and that leaves the door open to interpretations, particularly by media, that really don't help achieve the goals that we're trying to achieve with, getting greater acceptance of, from like Grant County, their utility district to grant electrical permits for data centers, right? They don't want to provide any service to mining operations, but they're fine with data centers. The same thing. That's one of the things that we're going to have to look at too, is just kind of cleaning up how we speak about what it is that we do.
I wanted to transition next into blockchain's impact and the implications on the bigger world, like people, like how is it going to impact their everyday life, and kind of in the context of the haves and have-nots, because we're still in the minority to even know what blockchain is and be in this conversation, but so many people have no idea that there's this massive transformation that's happening in the background. And then you have governments like China who hold on to a lot of control, and it's kind of scary to think what's going to happen with blockchain plus social credit. And then you have Latin America, where it's like maybe some of these governments are so ripe to be overthrown that blockchain could potentially be leveraged by the people to create a more fair system. So kind of like with all of these factors, what are the implications and thoughts?
Yeah, it's a strange new world we're in. There's actually a new app in China that will show in the room who's in debt. So like you could be walking down the street and it'll like show you that person's
shaming.
really in debt or not. That's not a blockchain thing per se, but it's a privacy thing. So there's just, I think anytime that there's a massive new unleashing of technology, just like Web 2.0 was the user contribution, that, Web 3.0, I think ultimately is going to have a dramatic impact on the unbanked, the roughly 40% of the people on the planet who don't currently pay exorbitant fees to banks in order to, transact locally. I think there's some really good implications there. I think with the shift in regulation in the U.S., investment probably ends up looking similar to investment before, which is kind of more the natural result of capitalism, where it tends to accumulate, not in a Pareto-like way, but really extremely in the 1% of the 1%, where what is the stat now? Roughly 40 people control over 50% of the world's wealth now, and they're writing their own rules because that's kind of what you can do once that happens. So I don't know that you can ultimately change that, but I do think that a world that has really low transaction fees, not charging somebody $37 because their bank account temporarily went negative. A lot of the system is set up where the people with the least amount of money have the least advantage, and I think that ultimately decentralization in the blockchain should change that. Whether or not it does is unknown.
So in my view, I agree it should, but I don't think it will, because the people that are working in that space right now are not the people that have been impacted by, my bank account just went to zero and I was just charged $35 because I have no money.
It's true.
Right? These are not the people that are getting the funding and the support to start their own companies. And I think that's kind of the challenge. That's one of the problems that, I've seen for a while. Last year I was down in Colombia, and speaking with and working with some of the politicians and government workers down there. And there's an interest in Bogota, particularly, to bringing in blockchain technology. And what they want to do is not, develop blockchain technology so they can have stronger companies within the country. They want to see how they can apply blockchain projects to increase the amount of trust that people have in their government, reduce the amount of fraud that the average person deals with on a daily basis when making financial transactions. And there's a couple real interesting projects that I was told about where they're actually looking to work with farmers in agricultural areas, farmers that have no access to internet because they're so far remote, but they do have very limited access to cell phone signal, where they want to figure out a way to develop some sort of contract that they can dial into, send text, in order to provide information about their crops, their yields, in turn for the government to better support them. And so I think that's a great way for the people that are not, essentially unbanked to gain benefit. But the challenge I'm seeing is these projects are going to have to come from either, nonprofit organizations or governments, because the companies that are rising up in the blockchain space are doing it in order to, become the next Google.
Yeah, that's right.
They're not trying to be, I don't know, first thing that comes to mind is Elon Musk with his internet satellite network.
Right.
Nobody's trying to do that.
Yeah.
Everybody's trying to be the next Amazon, Google, things like that.
Sure. Yeah.
And so I think that's one of the problems that we have too right now with blockchain. We don't have essentially an identity outside of what software has always been.
Right.
Yeah.
Definitely, that's definitely true, and definitely, hopefully, we can see some change in that balance structure over time as awareness builds. I do want to have one more formal planned question, and then get ready for your questions from the audience. So definitely want to touch on Bitcoin. It used to be $20,000, and now it is much, much less. So what implication does that have? What should we take away? Does it even matter?
Well, it's much, much more than 50,000 Bitcoin is required to buy a pizza. So it's all relative, I think.
That's a very expensive pizza.
Yeah, Bitcoin at $3,500 is still, in my opinion, substantial. I do think that the prices will dramatically rise over the course of time as different use cases beyond buying and holding emerge, and new approaches to lower transaction fees and ease of user experience means that there's just a lot more liquidity and usage beyond investment, which investment is a good use case for blockchain and decentralization, but I certainly see that changing over time.
So I think about it in a couple different ways. First thing comes to mind, 2017, first part of 2017, I was buying Bitcoin at $1,200. Here we are, the start of 2019. And it's up 3 times. That's 3x. That's great. Yeah. That's a fantastic return.
Yeah.
I don't know of anybody that would look at that and be like, it's not enough. Actually, my grandpa would, but that's a whole other story. The other part of it is Bitcoin has a lot of interest from institutional investors. There's a very limited amount of Bitcoins in the world, and there's an even more limited amount of Bitcoins that have never been transacted with. And in general, the Bitcoins that have never been transacted with are the ones that the institutional investors that I've spoken with want, because that makes the KYC and AML on them very easy. So there's a very large and active OTC market for Bitcoin. But ultimately what we have is that the cost of it's going to increase, because if everybody wants it,
Right.
And
Limited supply.
there's
Classic
considerably
economics.
less than 21 million.
Yeah.
Yeah.
Right.
It doesn't matter? No, it doesn't matter.
Right.
Because Bitcoin has its functionality. Right now it's buy and hold, virtual gold. If it doesn't go anywhere beyond that, that's fine.
Right.
It was essentially the proof of concept. It's the Kleenex, the Xerox, the Coke. What matters is what we do with that concept and technology afterwards,
Right.
which is why I think things like Ethereum are fantastic, not because it's a variation of the Bitcoin, but because of the virtual machine that it has.
Right.
And there's going to be greater iterations upon that are going to be even more useful to us. And I think that's where we're going to see really the actual value of this technology coming
Yeah.
to light for us.
Yeah, that's right.
So if Bitcoin is $30,000 tomorrow, I'm going to say great, still doesn't matter.
And there's plenty of awesome projects. Some people complain about that. Let's say that there's several thousand coins. We have how many U.S. stocks? 4,000 to 5,000 U.S. stocks. I mean,
Yeah.
we can handle
We have a
complexity.
ridiculous
There
amount.
doesn't need to just be one. It doesn't all need to fit into a world of Bitcoin maximalism, which it looks a little bit more like that today from a market cap standpoint. Again, I totally agree with you. It just being super early on from an economic standpoint, there's so many things that still have to be played out before you can really get to, the growth and the escalation of prices over time.
Definitely true, and I love hearing about potential futures with Bitcoin and many things, and I forget the source, but I know someone came up with a number of if Bitcoin hits $250,000, then it will overtake the US dollar, and to have like a Bitcoin, anchoring global currencies, that's kind of the future I'm hoping for.
Right.
So we'll see, that would be fun.
I do think Venezuela's trying that.
All right.
Not too well.
So I'd like to open up to the floor to see if there are any questions from the audience. Yes.
Yeah, as long as you're ready to talk about it. And I'd like your opinion on the fact that it's clear right now that are in China. So if
Yep.
Bitcoin ever becomes useful,
Right.
talk about that, because that makes for consensus and trust.
Yeah. It's an awesome question. This comes into play in so many different arenas. You mentioned EOS. EOS is highly centralized in their data centers. Arguably with what you're pointing out on the Bitcoin mining side, it's also highly centralized. Very few people ultimately control the vast majority of mining resources on the planet. The notion of moving away from proof of work to proof of stake and some other mechanisms, Ethereum and their foundation being sort of the gold standard of everything needs to be truly decentralized has not been able to make that transition. There's still so much that will need to be figured out, and I think there's more to your question than just implications of Bitcoin. I mean, China in many ways, because of different approaches to state funding of AI, not having the same controls we have in terms of privacy, arguably is already leapfrogging the U.S. and will probably in the future, whether it's this combination of factors of mining plus several other things, can likely become the world's dominant economic power. And could Bitcoin be a lever or control for them to wean the world from the U.S. Treasury? It's entirely possible.
Right now,
so.
I think it's an inevitability. Like China is just so much more strategic. U.S. is hampered by legislation. There's just so much more direction and investment in technology and very clear goals to get ahead that it's only a matter of time. And it's a great question. What does Bitcoin, them having so much mining power, mean specifically? I mean, hopefully they own it. It matters so much. I mean, it's like having the biggest luxury good that you could possibly have. So I don't think they would tank it on purpose. But they're controlling a lot more than that though at this point.
Well, I think also one of the things we need to think about is them controlling that much hashing power is a symptom of a bigger problem. The bigger problem being that for decades, we have not invested at the same rate into technology as they have.
Mm-hmm.
We have not invested into innovation. We have essentially said, well, we're the best there is. Nothing's going to come around and change what we already know. Then something came around new, and we're not positioned in order to essentially meet that new market good, that new market reality. And they've capitalized on that. They own, it only makes sense that they own all the hashing power, well, the bulk of it, because they're also the place that manufactures all the equipment used to do the mining.
It's true.
We don't own any of our own chip manufacturers. All of that is done in Shenzhen. We've done that to ourselves, here, from a U.S. perspective. Now, them being able to control so much of Bitcoin, and likely that'll mean they can control so much of any other proof of mining based coin, or proof of work based coin, is a question of, do we trust them to be good stewards of their own money? And I think history has shown, for the most part, they're going to be focused on their money and how to maximize it. And if everybody can work with what their plan is, they're going to do fairly decently. The question comes up is, what happens when we're at odds with them in a financial sense? Where does that go when they're able to essentially change this technology from being useful? Say Bitcoin suddenly is able to get to 40,000 transactions per second, and they hold a significant amount of the hashing power, and they just take it all offline. Now, all those transactions are going to be backed up. Now, any technology that's built on that particular network or others is going to be completely unusable. It could potentially create a whole new methodology of company versus company conflict, or even nation versus nation. It opens up a lot of problems with that kind of power being left in any one group's hands.
But it is a market, though, and ultimately an interdependent market. If they turned it off, would evaporate the value of what they're, so that's part of why it hasn't been misused.
Well, they can turn it off and then they can turn it back on a day later.
Yeah.
They can do it to actually manipulate.
Right, or it's a very long-term play.
Right. Yeah.
We have time for maybe one more question. Yes.
So in 2018, over $1 billion of Bitcoin was stolen in hacks. So with blockchain being like this decentralized asset control system, how are we going to convince people to put the title of the house on the blockchain and the risk of being stolen and hacked? And the only recourse to report is the ledger, and that's going to argue for whoever's stolen.
Well, so a couple of things. Bitcoin and blockchain are two different things. And in general, the hacks that occurred were because people lost their two-factor authentication credentials, and the 2FA credentials were either spoofed, and I know of one instance, but in general, they were utilized in order to gain access to somebody's wallet or account. It really came down to people being very sloppy with their own security. All right, right now, we don't hold the deeds or titles to our houses. I know I don't. We have companies that do that for us. So generally what we're going to see is companies are going to come and perform that same functionality for us. We're always going to have middlemen. We love middlemen. So there will be somebody that is in that place to do that, and they will be expert at that. And then if they screw up, they will have liability insurance that you can then take action against. Just like any title company that we have right now. Does that, yeah. Well, blockchain can improve the title system by increasing the efficiency of it, reducing the chances of them losing information, and making it streamlined so you can access your title anytime. Somebody can access your title anytime. That if you've given them, the security rights to do so, they don't have to contact that company during their hours. Right? And then there's other functionality that could arise. You could have specific contracts written into, or wills that inform how a specific contract works, changing the name on a deed upon the death of a person and that verification of that. And so you can automate these processes, which would take it away from middlemen, take it away from the traditional systems we have right now, and create more efficiencies in theory.
It's also part of the infrastructure and the improving of the user experience, which would allow multi-signature to prevent that from happening.
Yeah.
So if you, let's say your account got hacked, but it required 2 to 3 signatures in order to move a particular asset, then that certainly helps with that particular question. I mean, in no cases of the 2018 hacks that you're describing was there an actual failure in the cryptography. There's human failure that, whether it was Mt. Gox a long time ago or, using your dog's name plus the current year as your password, those things are seemingly really difficult right now, but through the improvements of wallet user experiences and technologies, there are ways of addressing that. And it's just, again, it feels that we're in this early state. You can be secure, you can prevent yourself from being hacked, but there's an extra cognitive burden in order to know how to do it. Mm-hmm. And that I think reduces over time.
All right, one last quick question.
Right. Yeah. Right.
I think, yeah, there's definitely, a bigger conversation around it, but in general, security is always a concern, and as technology evolves, there are always hackers that are evolving at the same time with bad intentions or, country versus country with, hackers with bad, but.
I think I'll pose a question. What did we do to Experian? Yeah, what was their punishment for losing all of our information?
Nice, that's true.
Yeah, they did.
Yeah.
Yeah,
Exactly.
and that's also one of the things we have to face is outside of Bitcoin, this happens all the time. And we're not very good at holding companies' feet to the fire about it. We may have to become that good. We may have to do that. Because at some point, there will be a central authority of some sort, say Wells Fargo, holding a ton of your cryptocurrencies and the cryptocurrencies of, say, all of the Pacific Northwest in custodial accounts, and somebody leaves a password on one of their monitors, password gets stolen, now all those cryptocurrencies are being held in Romania. Well, now what? And that's where we have to hold companies like Wells Fargo, wherever it would be, in this case Coincheck, responsible.
On that note, this does conclude the discussion for this panel. Thank you all for being present and participating, and thank you, Scott and Dave. We will be around if there are any additional questions. Right now we have a networking break, and we will come back here at 2:45.
Yeah, so during this approximately 10 minutes, just to get over the uncomfortableness of conferences, we would encourage you to go talk to somebody you haven't talked to yet. But you have about 10 minutes, and then we have an awesome speaker who just got here, Brett, who will be speaking exactly at 2:45.
Thank you.
Thank you.